after the surprise block of most of President Trump's tariffs. Still in the green, though, moderately. If the court ruling stands, $220 billion worth of tariffs will be removed, including the so-called reciprocal tariffs, the ones tied to fentanyl, and the 10% universal basic one. But tariffs for auto, steel, aluminum, those all remain, as do the levies on pharma and semis. Joining us now to map out what's next is Dan Clifton. He's head of policy research at Strategas, which is a Baird company. Dan, great to have you here, especially to dive into this interplay between tariffs and the revenue loss that we might be seeing now, right as they're trying to get the one big, beautiful bill across the finish line.
Yeah. So first, thank you for having me. I mean, this is a big decision. At the end of the day, tariffs probably aren't going to change very much. We think Trump has legal authorities to reimpose these tariffs, particularly through the 1930 Tariff Act. But now there's a host of uncertainty, and that will have ripple effects until we get clarity on where we're headed, whether there's going to be a stay from the appeals court or whether Trump is going to pursue a new set of different tariffs. I think the point that you're raising, Kelly, is the right one, is that you got this tax bill coming through Congress just as you got uncertainty around tariffs. Now, Congress has been very clear they were not including tariffs in the cost of this tax bill, that they were keeping it completely separate. I think that might have been a responsible action. But if you're a bond investor and you're trying to handicap the impact of the deficit from this tax bill, you had to include both the deficit impact of the tax bill and the potential from tariffs. And you have about $200 billion of tariffs coming in on an annualized basis. So if you're going to take away that stream, it could have an impact on bond yields and could create some disruption. I would argue it's unlikely that we're going to get more spending cuts or, smaller type of tax cuts here because of this tariff decision. I think Congress is basically locked into a set of bookends as the Senate begins to proceed and deal with this. But then you have the Fed, right? You have the Fed and you have foreign policy on top of it. So a lot of different issues at play. This was a major decision by the courts.
It's just ironic, we're showing 442 on the 10-year, 492 on the 30-year, and two different things are happening. One, the Senate's probably going to make the bill bigger and less deficit-friendly. Two, we could lose some tens or hundreds of billions of dollars in tariff revenue. Bond market doesn't really seem to care, which makes me wonder how much they really cared about all of this in the first place. So, maybe they just think it's going to be more status quo than anything. I mean, do you think he is able to kind of keep that revenue coming in by issuing these tariffs in a different form?
Yeah, absolutely. So it's a timing difference, but we always believed that the president had more legal authorities in other areas. And we were surprised in November. We wrote about the legal risk of IEEPA and going down that route overall. So we think he's actually on better footing if he just started the process to start doing these new tariffs, if he wanted to keep them in place. Because if you think about it, Kelly, he's got a July 9th deadline on these reciprocal rates. The judges that were representing the lawyers representing the Trump administration were arguing that they would be kneecapped in these negotiations if the tariffs went away. And you're not going to get resolution on this in the appeals court or the Supreme Court probably before that July 9th deadline. So at the end of the day, why not just go for what you know you can do, start to get them up, and then that starts to incorporate into the revenue. And I do think that the markets now are starting to look at it and realizing that Trump does have a lot of authority. Last night, a lot of people were saying this would be balance of payment authority, which only allows you to raise to a 15% rate.
Right.
And we've been showing, no, they can do this through the Tariff Act of 1930. That allows you to go up to 50%. So they can get everything they wanted on reciprocal, including the 46% Vietnam rate if they go that route. The only restriction they have is it takes 30 days to do it. So why not just start the clock today, go through your court decisions, and if the court doesn't go the way that you wanted to, you still got this backup plan.
Yeah.
I'm a little surprised they didn't do that.